Yeah, I think let's go ahead and proceed with the presentation, and people catch up as we go. Yeah, so we'll get it going here. So let me share my screen with you. So fractional CFO services. Do you want a CFO or a CF now? And it's a running joke right now that a lot of CFOs nowadays are more of CFNOs rather than CFOs, because organizations perceive them as people who would veto just about anything. So like some of the employees or somebody on the board of director may have some suggestion, say, can we do it? Let's run it by the CFO. They would say no. And I read in the Wall Street Journal that the CFO, there was a high-profile case with the CFO of Walt Disney, and she was perceived by the board as very negative. So they ultimately let her go because of the perception of her as being more of the CFNO than CFO. So when we look at the change in expectations regarding CFO lately, we can see that the services are changing at a breakneck pace. And you can ask leaders of any accounting firm providing the services, and you will get an answer that it's very hard to keep up with all the changes in technology and different challenges that the current business environment poses. That's because businesses are operating in a rapidly shifting business environment marked by increasing regulatory, competitive, talent, and macroeconomic pressures, accelerated by technology advances. So clients don't just need financial advice to ensure their operations. They don't just need regular or traditional financial advice, or to be accurate and compliant for that matter, because accuracy and compliance are a given in the modern world. What they're actually seeking are not past looking financial statements, but forward-looking insights and strategic guidance to help them make proactive business decisions. The CFO role is evolving and creating growth opportunities for client advisory services, such services that truly bring value for the clients and their businesses. So it may not make sense to hire a full-fledged CFO. That's why it gave birth to a rapidly growing fractional CFO or outsourced CFO services. So when we talk about some of the macroeconomic and other key trends that are driving the change, the accelerated and more heightened expectations for the CFO services. And we need to understand how the CFO is shifting to chief future officers. So like perhaps when I said, do you want a CFO or CFNO, you would think, okay, so what's an alternative to a CFNO? So here we see on this slide that the alternative to a CFNO is chief future officer rather than traditional financial officer. The officers that can deliver true value added business insights and strategy. When we look at the CFO services, another way to call them would be FP&A, or financial planning and analysis. So that may be a more familiar term. Determining the skill sets of a fractional CFO and the importance of picking a CFO would require, and picking a CFO with the right training, tools, and abilities to deliver value-added advisory services. So that's one of the challenges that businesses face, how to pick the right one, to make sure that the businesses invest, not just wasting their company's resources on bringing somebody who wouldn't be up to par to meet the macroeconomic challenges and the actual challenges facing that specific company. When we get into a traditional scope of services for the CFO, we can name four of them. The first one, planning and budgeting. The second, forecasting and modeling. Third, integrated financial planning. And last but not least, management and performance reporting. So when we look at planning and budgeting, I wanted to show you a little video that shows you some of the conundrum and dilemma that goes on into the budgeting decisions. So check out a little video here.
I have a question. Your cell phone rings and you don't recognize the number. What do you do? Ignore it. Don't answer it. Not me. I like life. The other day, my cell phone rang 917. That's a New York number. I didn't know who it was. I picked it up anyway. I hit talk. I said, hello. Guy in the line goes, hey, Bruce, what's going on? My name's Jay, not Bruce. So I said, nothing much, man. What's going on with you? And he said, I'll tell you what's going on. I just got an email about the budget. It's supposed to be 15,000. Now it's 10,000. And I'd like to know what's up. I got excited in my chest. I grabbed the steering wheel. I was like, okay, focus. Your name is Bruce. There's a budget. It was 15,000. Now it's 10,000. No one's happy about it. That's all we know. That's all we know. So I just repeated back to him what he said to me. And I go, 10,000 is supposed to be 15,000. He goes, yeah, I know. Well, I just got an email and now it's 10. I go, listen, man, I don't know what to tell you. I've been on the road all day. I haven't even seen it. And he goes, did you send this out? I give him some attitude to Bruce. I didn't like it. I said, listen, man, the budget was 15,000. We had a couple extra expenditures. It went up to 16.2. I reworked it, got it down to 14.7. I had 300 to play with, so I called it 15 and I sent it out. And he goes, yeah, well, now it's 10, man. And I was like, oh my God, that worked. That worked. Phase one complete. Phase one complete. Like now I'm in the door. I have a 401k. I was at the Christmas party, okay? So he goes, did Larry okay this? I go, listen, man, I took the budget to Larry. Larry said it looked fine, but I knew it was my ass on the line, so I ran it by Jennifer, just in case, just to double check. Jennifer said it looked good. I sent it out. He goes, yeah, well, now it's 10, man. And I realized this guy has no idea what's going on over there. He hasn't talked to Larry. I know he hasn't talked to Bruce. He doesn't even recognize my voice. I know he didn't talk to Jennifer. I just made her up. So he goes, listen, man, what are we going to do about this? And I go, listen, I'm on the road right now. I haven't even seen the email. Why don't you give Larry a call, check in with him, see what he says, call me back. Just praying he will, because that return phone call was going to be amazing. And he goes, you know what? Why don't we wait till you get home, you check the email, you call Larry, you call me back. And I go, nah, bro. Larry knows way more about this than I do. Give him a call me back. He goes, okay, hangs up the phone. To which I explode with euphoria because there's a small business in New York that is crumbling to the ground over $5,000 and nobody can find Jennifer. They're looking. I get home. I'm so excited. I take out my cell phone. I'm like, you know what? I'm going to save that guy's number. Give him a call in a couple of days, touch base. You know what I mean? Check it. See where we're at, So I save it in my phone under random guy. That's what he is. He's a random guy. 4 or 5 days pass, I forget about it. Laying on my couch, watching the ball game, phone rings on the dining room table. I get up, watching the game, grab the phone, watching the game, look down, random guy. But it's been a couple days, you know what I mean? So I'm like, random guy? Who's random guy? Like, who would even have random guy as their name that comes up? And then I was like, Random guy. Like now I'm panicked, you know what I mean? People's lives have been affected. It's only $5 grand, but I don't know how big that company is. But I'm addicted to it. You know what I mean? I started this thing. I need to see it through. So I put my earbuds in, just get a little distance, just get a little space. And I hit talk. Same guy goes, "Hey, Larry, what's going on?" Yeah, now he's calling me Larry. He knows something's up, but I'm not about to back down. I go, "Nothing much, man. What's going on with you?" And he goes, "Well, I got us on conference call with Janelle and Marie." And I was like, "Okay, here we go. Here we go. This is why we play the game, you guys. This is why we play the game." So I go, "Welcome to the call, ladies," as if to say, "Welcome to the show." You know what I mean? Here we go. Marie takes the lead. She goes, "Hey, Larry, what time is it where you are?" I live in LA. They're in New York. It's 5:30. So I go, 8:30. It's 8:30. She goes, "Really? What's the weather like?" And I was like, "Oh, weather's nice. Weather's nice." She goes, "This doesn't sound like Larry." And I go, "Oh, yeah? Who's it sound like?" And a random guy chirps him from the back and he goes, "Sounds like Bruce. Sounds like Bruce." Like he's gonna blow this case wide open. And I go, "Listen, guys, this isn't Larry and it isn't Bruce." And Marie goes, "Who is this?" I said, "I'm just some guy who had nothing better to do than to mess with you guys." And Marie got pissed. She was not happy. She goes, "You understand we're trying to run a business over here?" And I was like, "Yeah, well, I got that from the budget. I just figured it was a business thing." And she goes, "What do you think? This is some kind of joke?" And I was like, "Oh, a little bit. That is pretty funny." And she goes, "Let me ask you something." And I go, "No, you let me ask you something." And she goes, "What?" And I go, "Where we at with the budget?"
Yeah, so we saw in that. So my favorite part of that video is when the guy cannot figure out what's going on with the 5,000. So he's asking this random guy who is supposed to know the answer. "So what are we gonna do about it, man?" So it's like companies can find themselves in a situation where it's to the point where there are such significant silos in the organization, and so many cooks spoil the broth, so to speak. Then nobody knows anything, and blames everybody for everything. And ultimately it was only like 5,000, but it's only, we're talking about budgeting here, and the company was off by 5,000. And as the guy who answered the phone said, like, "I don't know what kind of business it is. For one business, 5,000 may not make a big difference, for another one it can." So like we don't want to find ourselves in a position where we either don't have any CFO services at all, any sound financial advice, or we hire somebody without the right tools and skills, that rather than find a way to solve the problem, would be calling a random guy to figure out what's going on. So my company is called the Bee Dance, and in the when the bees seek the source of nectar, what they see when they go through the tunnels and different apertures, they can exaggerate what they see, because they go off by the perception rather than by how the objects really are. So when they come back to the bees and they want to indicate the source of honey to them with the dance, they can actually show them the wrong trajectory, because they were indicating the trajectory based on their perception when they were in the tunnel, when the objects were distorted to their size, and it's known as the dance of a deceived bee. So in that case, if you're talking to the wrong consultant, it's like following the dance of a deceived bee, or following a random guy, so to speak. So on one hand, I mean, it's like the video is really funny, but one of the reasons it's so funny, because many companies are in a really bad shape financially, and they asking a random guy, what do we do about this budget not working out? Controller versus CFO services. So if we talk about controller services, the traditional ones are management, transactions, financial reporting, planning, and compliance. So how is that? How would that be different from a CFO? CFO functions would include the functions listed in the controller section, but at a higher level. And then besides that, the CFO would engage in financial analysis, key ratios and key performance indicators or KPIs, and the main ratios pertain to liquidity, activity, and leverage. That's the three main type of ratios. We'll talk a bit further about that. Then strategy, financing, and business partnering. So that's what differentiates the CFO from a controller. Key ratios are really helpful, because if the CFOs can run through the ratios and compare it to the right benchmarks, such as industry benchmarks to the competitors, it can yield significant and useful insights to inform the company's strategy and the company's decision to build a long-term value for their shareholders and for their investors. If we talk about key ratios pertaining to the balance sheet, the main ones would be in the liquidity ratios, or liquidity simply means whether the company has enough liquid assets to take care of its current obligations. So the most popular ratio, the most common one, is working capital. And working capital is simply current assets minus current liabilities. Here we are ascertaining whether the current assets exceed the liabilities. Because if it doesn't, then the company would struggle meeting the basic needs of the entity, such as paying the bills, the employee salaries, utilities, maintenance, and so on. Then we have current ratio, which is current assets over current liabilities. And most businesses want to see something like at least 1.2. So more, at least 1.2 current assets to 1 ratio of current liabilities. Then we have quick ratio. It's basically the same as current ratio, but we subtract inventory, because inventory can distort picture a little bit. So we see this section here is liquidity ratios. Then we get into activity ratios, and that would be things such as accounts receivable turnover, or how quickly we are collecting accounts receivables. Because if we take a long time to collect receivables, it goes back to the cash challenges to meet the current obligations of the business. And then we have inventory turnover, or how quickly we are churning and how to replace our inventory. So that's the activity ratios pertaining to the balance sheet. Then we get into leverage ratios. Well, leverage has to do with debt. How leveraged the entity means how much debt the entity has in relation to its equity, or the sources of funds that came from owners and investors, as opposed to that leverage or debt that came from the from banks and lenders. So the most common ratio here would be debt to equity. If there is too much debt, it will be very leverage ratio, and banks may have concern about the entity paying the loans back. So that's why we get to this point, common bank covenant ratios, because generally when banks issue a loan, they would have some ratios inbuilt there, because they would want to make sure that the entity doesn't have too much debt to the point that it defaults if something were to happen, some adverse event the entity would be scrambling to meet its obligations first, not even talking about paying the bank. So let's look at the income statement, ratios pertaining to the income statement. So the most common ones are return on assets and equity. That means how much profit do these assets of business assets generate, and then how much profit does this equity generate. Then we have gross profit margin, which is revenue minus cost of goods sold, or cost of sales, would give us our margin. And then if you take that margin divided by sales, it will give us gross profit percentage. And then after that, we have various operating expenses. So then such as selling, the most common ones are selling, general, and administrative expenses, also known as SG&A. So if we take all of those and divide it by net sales, that's another useful ratio, because it tells us how much company spends on so-called fixed costs, to things such as rent, or like marketing expenses, and the general upkeep of the business. While this section, when we look here in gross profit, we are looking into variable costs. So if the company is making widgets, it's looking how much it costs to make those widgets, as opposed to the selling price. So here we are looking at the variable costs. That's what's embedded in this ratio, versus here we are looking at the so-called fixed costs to maintain that business in general. And then we have, important for banks, interest coverage ratio, is to see if the company generates enough income to be able to take care of its loan interest and principal payments. Key terms we should consider are EBITDA, it's earnings before interest, tax, depreciation, and amortization. So it's basically operational profit of the business. And this EBITDA becomes very important when the company is getting ready to sell, because usually the business would sell at a certain multiple depending on the industry the business in. So for example, service businesses usually sell at 1 to 2 multiples of this EBITDA. So it's a big term in private equity, and especially when businesses are getting ready to sell. So that's another service we provide to people, is due diligence, financial and tax due diligence. And I actually show you the website. It's actually easier to follow on the website what kind of services we provide. So if we look at the company's website, you see here the BDANs, and when we look at these 6 sides of a honeycomb, you see here we have tax resolution, tax credits, access to capital, due diligence, FP&A or outsourced CFO that we're talking about today, and color accounting of financial literacy. So we see the goal is, from the conceptual perspective, if somebody is in a really bad situation and his cash and income are drained because, say, 90% of his paycheck is garnished, or he cannot do anything with his property because of liens, his bank accounts are frozen, the person is in the hole here. But so the first path is to get the person out of that hole, and then we can help boost then usually think about it. If somebody took risk not to pay the IRS, the most brutal collection agency on the planet, If the person is that of a risk taker, I mean, perhaps it's taking too much risk. But on the other hand, imagine for a moment we can harness that risk-taking ability. And we know that risk-taking correlates with entrepreneurship. So we harness that risk-taking propensity in the right way, and suppose we let's admit, yeah, one moment here. Yeah, so if suppose we teach the person financial literacy skill through color accounting, it's conceivable that that person can become an entrepreneur. And then we say, okay, that person became entrepreneur, is running a company. We need to help that person. We want to help the person to run a profitable company with providing the key ratios and insights informing strategy at this level here. Then imagine the company becomes very successful, and here we get to due diligence at exit when the company is getting ready to sell at a certain multiple of EBITDA that we were just talking at ratios. So you see, the idea is to go through the entire cycle here. Not everybody would need all services at once. Some people may need one service, some people will stop at some level. It depends on multiple factors and circumstances. But you see a conceptual framework here. And you hear access to capital. So one of the ways to infuse capital into the business could be from tax credit, like say historic preservation or conservation easements. That would be one way to get tax credits, or employee retention credits right now, which is a big thing. And the program would be running until 2024 for the year 2020, and until 2025 for the companies that have employees and meet certain eligibility requirements. There are various types of credits. We are not going to get into all of that because it's a different topic. However, I did want, since we were talking about ratios and EBITDA, we were selling, well, if the company sells, then it will be usually at a multiple of EBITDA, earnings before interest, taxes, depreciation, and amortization. So here's, that's why I want to show you the framework here, how we conceptualize servicing the businesses and adding value to businesses. And here, interestingly, in color accounting, we have very interesting modules, because we start with the workshop called Let's Talk Finance. So that's accounting literacy. Then you can build financial literacy, and then you can get to business acumen. If you have business acumen, you'll be able to make more shrewd business decisions. So that's the first module here. The second module after Let's Talk Finance is Now Let's Talk. In that module, we talk exactly ratios that I was just showing you here. So in that module, now Let's Talk, we'll talk about those ratios that we were just going through. It's ratios to inform the company's business decisions and strategy. And then the third module that you can take is Now Let's Keep on Talking. That's creating accountability groups for entrepreneurs to get together, share their experience, and also have sessions with their coaches on a periodic basis in order to keep them accountable for their progress. Because you see, if we don't have accountability framework in place, if we don't measure our results, a lot of things are gonna fall through the cracks. But if things are measured, they improve. But if things are measured and accounted for to somebody, they improve exponentially. And you can see it on a health level, you can see it on a personal finance level, and you see it on a company level, because taking accountability is a progressive way of taking responsibility for one's behavior, for embracing calculated risks, and then engaging in that tension. That's what color accounting beautifully highlights. Then in accounting, it's like in life, a lot about tension between value generation and value destruction in order to make sure that the entity of the company posts a profit at the end of the year. But how do we go through that tension? How do we navigate through that tension successfully? Well, if one good way would be hire a competent outsourced CFO. That way you don't have to hire a full-time CFO with very high salaries, but you can hire him to assess your business situation and advise you on the specific situation of your business through ratios and helping you make better decisions and leading you all the way through sale. You get to sale, helping you with financial and due diligence at that exit point. So then we were talking about we were talking about controller versus CFO, and we were a bit in the traditional realm. And then when I called it here, let's consider modern, adjusted to the times spectrum of outsourced CFO services. So here you have things, I put things like our company provides business financing, such as SBA loans, the COVID relief, SBA audits, including complex affiliated party rules. There are multiple entities involved under common ownership arrangements. And then we get into employee retention credit, including overlooked provisions to qualify, because some people think that the company needed to have reduction of income, but that's not the crux of employee retention credits. The crux is actually whether the company made significant changes related to COVID disruptions and answering to the challenges related to the COVID orders. So it's not just about profit, about revenue reduction, as a lot of people think. There are a lot of caveats there. And there are multiple other credits. And fourth, impact of Russia sanctions on businesses, because it's with the most recent beneficial owner rules, now the CPAs and lawyers would have to disclose the ultimate ownership of entities, because we see the Russia-Ukraine war and we have heightened risks of dealing with the wrong counterparty that may be on the OFAC or Organization for Financial Asset Control. It can be or organization be owned by people who are engaged in terrorist or money laundering activities. So we have to advise and watch out for that in the modern times that we live in. Then the fifth is cross-border taxation advice for businesses engaged in cross-border activity. Then six, M&A, mergers and acquisitions, tax and accounting support. That's what we were talking about, financial and accounting due diligence when the company is selling, or like one company is acquiring another target company. Then we talk about things such as sales and income tax nexus advisory. And so many people, I just talk with the client about the use tax issue, and they were completely taken by surprise that they were audited by New York State and assessed very high penalties and interest because they were not aware they had to pay use tax. So it's about being proactive and helping the client not to be caught by surprise by such things as, say, sales and use tax. Then in the post-COVID world, we talk about remote work tax issues and different employees work in different jurisdictions, how that impacts taxability. And then innovative method of teaching accounting, not old and tried, debit on the left and credit on the right. And it's very hard for people to follow sides, but more so using innovative approaches such as color accounting, where you can teach entire accounting just in two colors: green for uses of funds, and orange, like the sun, the color of the sun, solar energy, for the sources of fund. Just in two of those colors, you can do that workshop that I was referring to, module 1, Let's Talk Finance. So workshop is kind of like Monopoly. You actually have orange and green stickers, and you go through the classic transactions. You insert it into accounts on the toolkit board. It's a very cool system. And then that module, now let's talk, which is more about ratio analysis and to yield insights for businesses. And then finally, let's keep on talking those accountability structures for entrepreneurs to help them stay accountable for the results and targets that they plan for themselves. Usually, a very good model in that third module is called OKR, objectives and key results, and it's very good to do by quarter. I mean, ideally, weekly we look at the results, or monthly, but especially so we establish targets by quarter, and then we look down through different departments and say, okay, this is overall objective for the department, and then we have different functional teams within that department, so make sure that the alignment is happening and accountability to framework in place. But if that's a business owner, he is not really have accountability framework in place, then he can say, yeah, I planned that, but he doesn't report to anybody. You can see how it becomes sticky even in personal life. If you want to go to the gym and get fit, it's much easier to do it with the gym body, because we have that accountability. It will push us to wake up and actually go to the gym. So the same concept in business. That's the third module, creating platforms and forums for entrepreneurs to connect together, cross-pollinate experiences. And you see, I say cross-pollinate because like you have cross-pollination of plants by the bees, so hence protect and defend the pollinators. But the entrepreneurs getting together to cross-pollinate the experience and help them drive better decisions through adhering to concrete accountability frameworks. 10, providing businesses with insights on KPIs and forecasting future trajectory. And then finally, financial and tax due diligence. Then when we to leave you off with 5 easy tips to add value, I'd like to open another PDF here about the 5 tips of adding value as an outsourced CFO. So when you want to hire a CFO, I encourage you to look if this CFO is capable of doing the following for you. Number 1, challenge the status quo. Oh, this person is the same old, this person is not experimentator, this person is set in his ways, and the same old. Number 2, identify where the problems lie. This one is a kind of self-explanatory, just getting to the root cause of the issue, not just eliminating the symptoms. Or we solved something, but we didn't solve it on the back end. So then sometime later we have the same problem. Like suppose somebody, one of the clients had commercial rent tax problem because they are below 96th Street in Manhattan. They have to pay additional commercial rent tax. But imagine if I just helped them, it didn't help them plug the hose and create the systems to make sure they do actually file those commercial rent tax returns in time. Sometime later, they will be in the same situation again. So it's identifying where the problem lie, go to the root cause, and not just fix the system, not just fix the audit, help fix the audit right now, but to be proactive and close that gap, create better systems so that the client keeps on staying compliant, doesn't end up in the same situation. Number 3, PPP, standing for prioritize, partnering, and preparation. So help the company based on these ratios and the metrics that the CFO helps business develop, help them prioritize what to invest and what opportunities to skip may not be the right fit. And then partnering with bankers, and it was so crucial in COVID to have that relationship with the bankers for the loans. It was made very evident then. And preparation, help them prepare to anticipate what we can come next. Of course, we cannot envision everything, but help them be reasonably prepared to anticipate the upcoming challenges. 4, invest in yourself. The person that CFO is really committed to constant learning, development, he's investing in himself, because if he cannot invest in himself, in his own toolkit, how can he help the company come up with good investments? It goes back to that personal responsibility. Then get down to the action plan, and not just, in order to truly get down to the action plan, we go back to the accountability frameworks that will help businesses make sure that they actually stick to their targets. They don't just plan it, a budget, and forget, but they actually have monitoring in place to make sure they're truly on course of meeting their targets. And if they don't, they cross correct as they go. One last thing I want to tell you is about Jira, that a company uses. Jira software that helps forecasts and forecasts for the next 3 years, for the next 5 years, so that the company can see that based on the current operations and the variables we're using in the model, help the company project into the future as a tool to make better decisions impacting the company's future and the ability to not only continue as a going concern, but to successfully get to that point, to successfully grow or reach the point of sale where the company can sell very profitably, because EBITDA will be high, earnings before income taxes, depreciation, amortization will be high, so the sales price would be much higher. So that's the overview here, the outsourced CFO services, and I'll stop screen sharing for now, and would welcome any questions for you guys. So we see a question from Sirhi. It's hard to find a trusted advisor who can treat my business as a priority. What questions do I need to ask a person whom I am considering for a role of an outsourced CFO to assess whether that person is trustworthy, reliable, and competent? It's one way is by following the tips that we outlined, and then another big question is ask this candidate, how many companies did you help? What challenges did you actually help these companies solve? And this person can give you some examples, but then also remember about getting to the root, see if that person got to the root cause and plugged that hole in such a way that that problem didn't reemerge, that same problem reemerge. Because I've seen so many cases where the current problem would be solved, but that loop was never fully closed, and it was just a matter of time for the very same problem to reemerge. If you hire the person who cannot close the loops and make sure that any gaps are patched in the systems, processes, and procedures, because you see, it's crucial to have the right internal controls in place. What are internal controls? Internal controls in the organization are systems, processes, procedures, and policies, ensuring that there is segregation of duties, that the person who does bookkeeping doesn't reconcile bank accounts, that those duties are kept separate, the appropriate controls, the appropriate approvals. So then, when we talk about internal control framework in accounting, there is so-called crime framework, and crime stands for C is control environment, and includes such things as hiring practices, making sure that skilled, knowledgeable, and experienced people are hired, not just by some relative connections because they are relatives of somebody, knew somebody, but truly competent people in their field for that specific function. And then if there are procedures and manuals in place, if there is correct tone at the top, because there is that saying that the fish starts rotting from the top. So the same, if the management team doesn't set the right attitude, then the whole organization will suffer. So that's C, control environment. Then R is for risk management, is managing and mitigating risks. So for example, it's like working with the risks related to the supply chain disruptions, or risk related of getting a vendor or supplier from the country on the OFAC list. So there are multiple risks, and the company must have processes and procedures to mitigate those risks. Then I is information and communication systems of the organization. So we're getting into cybersecurity, making sure that the organization has the right protocols for the data use and the right cybersecurity controls. Then M in the crime framework is monitoring, ongoing monitoring. That there are different sets of eyes looking at these processes and evaluating. And then E is evaluating existing policies and procedures to see if any policy manuals should be changed, but not only changed, but also ensuring compliance. So I would be suggesting asking that person in this sense, what was the most difficult area to establish internal controls in? So you can say, in this crime framework that we just enumerated, what was the most difficult for you to apply? And then the second question would be, which project did you do that ended up to be to be a failure, and what you derive from the failure? What lessons did you take from that botched project, and how did it help you grow as a professional? I know it was a bit of long-winded discussion, but the thrust of it is seeing the actual experience that person had with tackling company challenges. And another question is, what key parameters as a small business owner I need to monitor closely to stay on top of my business financial health? So he's going back to those ratios. The big one for small businesses is cash flows. Because I hear from business owners, some business owners say, I don't know what's happening. It seems that the revenue's up, but I never have enough cash to meet current business needs. So it shows you that accountant doesn't have that owner doesn't have accounting literacy to understand or be able to review his bookkeeper's work in order to truly know where the business is at from the cash flow perspectives. So if that person, say, went through color accounting course, just 5 hours workshop, it would give enough accounting knowledge to keep abreast with the financial statements. Because a lot of bookkeepers and CPAs would just send the financial reports, no analysis, nothing, just in the email, here you go, your income and balance sheet for the month. And if the owner is not financial literate to read that and see where they stand, especially from the cash flow perspective, then they are in bad shape. So I would say, it's like that old saying, cash is king, making sure that the company is sound from the cash flow perspectives. I would say that's some of the biggest challenges for small businesses.
Hello. So there's a question that I wanted to ask. At what point do I need to consider hiring an outsourced CFO? Let's say if I'm not owner of a small business.
Yeah, I would say that the beauty of the outsource of fractional CFO is you don't have to keep this person on a payroll all the time, but you can hire that person in the beginning. I would say hire the outsource CFO at the beginning of setting your underlying infrastructure for the business, making sure that person helps you set the right internal controls in place, the right systems systems, policies, and procedures for the business. So I would hire upfront. I would hire him for that engagement, and then if you get going with your business and then you run into specific challenges, like say cash flow management, you hire that person as you go, and you may need some specific advice as you go. And different business in different industries may struggle with different things. So hire him or her as the issues emerge. And then I would say, if your business, and then I would say schedule. I would hire a quarterly review, as we were talking about objectives and key reports for each quarter. So that way you can say, okay, could you review my quarter and let me know what I can do for the next quarter? So I would say I would recommend on a quarterly, at least in the beginning, to set everything, the infrastructure up, and then I would recommend on a quarterly basis. But as I said, the beauty of the fractional or outsourced CFO, you don't have to keep the person 40 hours a week and pay high salaries. You can hire I would recommend at the quarterly intervals for the discussion, and then depending, hopefully you don't have any severe issues, but he helps you get some direction for the next quarter, and helps you have a more successful subsequent quarter of business operations.
Yeah, thank you. Definitely, I would also need to be a little bit aware, at least, about these things that exist before hiring somebody. But thank you for explanation.
Yeah, it's a very good question, and it goes back. Remember, I was saying in color accounting, one of the fundamental principles is the constant tension between value generation and value destruction in such a way as to yield profit. And then the IRS has the different, when the IRS looks at the expense to see if that expense is deductible, the IRS looks at three things. Was that expense necessary? Was it ordinary? And was it reasonable? So when we think about the business ability to use scarce resources, and small businesses don't have that much resources to use, there is a lot of that tension going on between the value generation and value destruction. So I would say, see how your CFO is advising you. See if his advice is bringing value. Test him out. Check it out for 1 quarter. If you see he's not advising you well, you don't see value, well, find a CFO that will help you maximize, not minimize, those scarce business resources. You already go through a lot of tension between value generation, value destruction, and it's so hard to post a profit. I would like to bring you back to this website. So the website of the company is the bdance.com, and you can see the services that the company provides, and the contact information is here below on the website. So check it out, see what applies, see what you think will help you maximize that value for the company. And I look forward to staying in touch with you. And as we say in our business, cool bees. Let's get out there and let's be productive as the bees. So good luck, guys. All the best to you. See you next times.